Existing home sales did pick up in the month of August, coming in just slightly better than expected. Annual pace of 4.13 million and a monthly build of 7.6, just slightly ahead of consensus. But our next guest says it's still not enough for a strong rebound in housing. Jobs are the critical connection. Markus Schomer, a Bloomberg Best economist, joins us now. He is very accurate according to the data we keep on existing home sales, and a global economic strategist he is right now at Pinebridge Investments. Markus, I know these numbers were slightly better than expected. You did expect them to be even a little brighter than the picture we got.
Yeah, I'm a little disappointed by the lack of a stronger rebound. But I think what's going on here right now, we saw the big decline in the previous month, which was a reaction to the expiration of the first-time homebuyer credit, which expired at the end of April. What we're seeing now, I think, is a much more subdued recovery, because a lot of the housing demand that should have occurred right now was brought forward in the months of March, April, and May because of the credit. Credit expiring, recovery will be slower for a little while. It takes a while for us to really see what the actual strength of underlying demand is.
So it is a big policy distortion factoring in here, more than the consumer demand picture. But give me a sense there of the other economic indicators we got today. Jobless claims, you say also kind of a false read.
Yeah, don't pay too much attention to the high frequency numbers. What we're seeing, right, we had a big surge in jobless claims earlier in late July, early August. We're now seeing that come off, and we had the first increase in 5 weeks, which for a series like this is actually quite a long streak. So I don't put any value in the increase in jobless claims. I think we're still on our way down to 420 or even 400 in the next few months, and that's a good number.
Give me a sense of how that overhang of possible foreclosures is factoring in here, because we do know the Obama administration says that they have plans to announce proposals for emergency loans to keep the jobless from defaulting. So how much of a problem yet to come is there?
It's a major problem. I heard Mike McKee talk this morning about an overhang of about 4 million, shadow overhang, maybe all the way up to 7 million. I think that's a huge problem. And my friends at Deutsche Bank released an interesting research note the other day, also putting the number at about 4.5 million. And they reckon it will take until the middle of 2012 the housing market to be back to normal. So I think that overhang will keep prices low.
But the policy response on that proposal?
I don't think the policy response will do much. We've seen so far all the policy initiatives have not done much at all to deal with that overhang of unsold homes.
All right. Well, Markus Schomer, global economic strategist at Pinebridge Investments. It sounds like middling is the word here, sort of slightly better.
You have to take a step back and look at the longer term trends. Don't get too spooked by like 1 month.
All right. Thanks, Markus.